Investors and traders, welcome to the channel Market Chart Pattern. Today is 27th of July 2024. I hope everyone is having a great weekend. In this segment, we will be taking a look at the key US financial sector stocks, such as the big bulge banks, Goldman Sachs, Bank of America, JPMorgan, and we will also be taking a look at certain ETFs, such as the regional banking ETF KRE, and also the XLF, which includes the big bulge uh, banks and also credit card companies such as Visa and also MasterCard. As always, this video is for educational purposes only and it's not a financial advice. So this time it's different. And what do I mean by that? If we were to compare how the US financial system was working through the banks before the great financial crisis, i.e., before 2008, it was very different back then. Banks were not as highly regulated as they are today. The banks work in a different way. And what do I mean by that? There was no Volcker rule. So the banks actually could do proprietary trading. So think of proprietary trading as like a hedge fund inside a bank. So what it meant was that the banks, using their own money, their own capital, could actually take positions in the market. So it means they could take highly leveraged speculative positions. So this meant there was a lot of risk on the bank's balance sheets. So when the credit crisis happened, after that, when the government came out to bail out certain banks, a lot of regulations were put on, and one of them was Volcker rule. What actually meant was that now the banks could actually no longer work or could have a group inside which worked like a hedge fund. So that meant that proprietary trading was not going to happen, but it does happen under certain guidelines and very regulated, per my knowledge, right? So, what do I mean by that? Why we are discussing this? And one of the things is that some of these stocks that we actually look at now, they were not even banks back then, such as Goldman Sachs. It didn't even have a banking license before the credit crisis. And in fact, this organization, which is a securities firm, was hit quite hard, and they actually had to go and get a banking license because the way the reserve system works and the regulation for the banks is slightly different. And also, for example, the Bank of America, they were able to do some acquisitions. They were able to actually acquire Merrill Lynch, which was also a securities firm, and that actually also helped them get into a different kind of a segment of the market, which was basically, having a securities firm doing market making. And JP Morgan was able to also, acquire Washington Mutual, and they were also able to acquire Bear Stearns, which actually, really helped on the trading side of things for them. Okay, so what we are looking at right now is the weekly chart of the regional banking index KRE. And here, what we have seen is that when we were back in January of 2022, this market was actually signaling something to us. It was putting in topping patterns right around here, and the market was actually selling off. And it's right around here, about a year later, around in March of 2023, that we had a really big crash around here. That's when the Silicon Valley Bank collapse news actually began to emerge. But things were actually not looking very rosy right here. So the market was telling us. And if we look at right now, especially in 2024 and 2023, this is the time when the Federal Reserve came out and they were able to put a fair amount of liquidity into the system and actually, really supported the financial system through that. Unfortunately, it also meant that some of the banks, the bigger banks, they were able to actually buy some of these smaller banks. So too big to fail kind of theory still exists. but it did stabilize the financial system, and we have seen a nice rally after putting in a double top in October of 2023, and slowly but surely it's reaching towards our target, which is around $62 to $63 per share level. Now, once it's able to get above this, and technically we could have a bigger ABCD, which could see it going much higher, but this is a critical level, and it could also be a possibly be a strong resistance level, so we'll be watching this really carefully. But if you look at the past 3 weeks, how this index has just moved really quickly, it's reminiscent of this move around here from the October of 2023 lows. And what it means is, that we have also seen small cap equities in the Russell 2000 move really quickly. And in fact, when the broader indices, in particular nasdaq 100 stocks, have been selling off, the Russell 2000 stocks have actually gained a fair amount. So it's all related to a good banking system supporting these smaller companies, their balance sheets, which is actually good for those stocks. Now, if we were to just have a quick look going back to 2007, there we go. This is what it looked like back then. You see, so the pattern that we have in the regional banking index now is very different. Now, it doesn't mean that we cannot have a top come in, or we cannot have a a correction come in, which will impact stocks in the Russell 2000 complex, for example. But the pattern here is actually higher highs and higher lows. So this is why we like to take a look at these markets from a technical perspective. So at the moment, don't really see anything, the kind of things that we saw back then. But doesn't mean things cannot change between now and, let's say, October of this year. So we'll be on a alert, watching for the key patterns, and especially when the market gets around this level. All right, now if we take a look at the XLF, which has some of these bigger banks, and also the Visa, the companies such as Visa and MasterCard, and it also has the Berkshire Hathaway, Warren Buffett's company. And this is one of the reasons that these companies have really healthy balance sheets, and we have seen a very different kind of a pattern formation from a chart perspective, which this market is showing in comparison to KRE. And it's just taking out these highs here, making new highs compared to 2022. So it looks pretty strong, and slowly but surely it seems to be moving towards our target of 45, which is shorter term. We do have higher targets as well. So this is what the formation looks like. It's higher highs, higher lows, so it's moving higher. And if we were to compare it to 2007, for example, so we go and take a look at how it looked like back then, and even back then, things looked pretty nice, and we had some sort of a topping formation and a pullback come in, and then we had a double top formation, and ultimately the trend line broke, and that was it, a retest of the trend line, and boom, off it went to the downside. So this was showing that there was actually a fair amount of trouble in the financial sectors, and mainly these banks, because there was a lot of risk on their balance sheet. Compare it to today in 2024, things are a lot different, and this is one of the key reasons that we actually have seen a bull market last about 14 to 15 years in the US stocks. That's probably the biggest bull run in the stocks post the World War II era. So that's interesting to note. Now, let's take a look at some of these individual banking stocks. So we will start by taking a look at Goldman Sachs. So here we go. This is the weekly chart for Goldman Sachs, and Goldman Sachs has did an inside bar within exactly the range that we had identified for it. So it's got a little bit more way. Possibly it can go and hit 518. But if it begins to pull back, we are watching this this trend line around here. It could be drawn several different ways with an overshoot if we want to be a little bit more conservative. If it begins to break below that, then it can pull back much lower. around in this region, right from structural support around here, but the chances are it's likely to actually touch 518. That possibility is still there. It came pretty close to that level. The high was 509.48, so it did miss it by about 9 points. And if you look at JP Morgan, it's actually doing a very interesting pattern formation on the weekly chart. It's right into this zone that we had identified. Longer term view, our longer term view for JP Morgan after it completed this big ABCD one-to-one price projection is that it's likely to actually enter a trading range between $200 and $225 per share level. So fair amount of big range, and maybe it's actually might go into distribution. No signs of distribution as of yet, but in the weeks ahead it's possible. Look, we have this kind of a pattern formation taking place there, and we have this blue shaded pattern, slightly different. It's three drives to a top, or a ending diagonal or something like that, or a wedge formation, maybe you are able to say. And the fundamental catalyst that I'm thinking about is that Jamie Dimon, all this run you see, let me go back here. We have had this fantastic run since 2009 in this stock, and that's all Dimon effect. It's we have a rock star CEO who has actually led this bank to greatness all over again. And if he's about to leave, or if he decides to leave, he has actually mentioned that publicly. That's one catalyst which could cause maybe some of the really long-term investors, such as pension funds and mutual funds, to probably rebalance some of their positions in that. Maybe rotate out of it, go into some other stocks. Again, we'll have to wait and see, but that is one likely scenario which we are keeping an eye on for JP Morgan. Then if we look at American Express, again a fantastic company, is one of those stocks which Warren Buffett has held for a really long time. And from a technical perspective, it has actually gone into this window that we had identified for it. It's about a $20 window. It's already met the first target, $242, and we saw a pullback for a few weeks, and then it's just made another high. It could possibly go and complete this bigger ABCD to $262, $263 per share level, but it has already reached the window of opportunity that we're watching for. So here, again, the stock has been a fantastic run, but we could see some sideways trading price action come in here. Maybe some players think about booking some profits in here, so that's a possibility. So again, we are really watching this possible completion of this pattern in full quite soon. Then let's take a look at the Bank of America. There we go. So this is the weekly chart of Bank of America. It also met our objective, and in fact, it exceeded that by some extent. And let me actually put it back around here. Yeah, there we go. So here again, what we could see is sideways to down price action. Maybe it goes down a little bit to touch this 20-week period moving average, but again, our objective was met. It's one of the banking stocks, which one of our favorites. We are really bullish on this one based on the really long-term cycle. So I'll put a link to that video I did in beginning of the 2024, beginning of this year, where we looked at really long-term cycles operating in this stock. So in my opinion, it has more upside to go, but it doesn't mean that it cannot correct. We have seen some correction come in early part of 2024, then again in March to April when the broader indices also corrected, and now we are going through a rotation, especially in the technology stocks. So we have seen some pressure come in Bank of America stock as well. Now let's move to Citigroup. So Citigroup also had a pretty good, nice recovery. It's finding a fair amount of resistance right at the 61.8% retracement. And one thing to note is that this stock did not make a new high. like Goldman did, like JP Morgan did. So that was the high in 2020, January 2020. In fact, before the sell-off from the panic of the pandemic. It's also doing this wedge pattern here. So not a favorite stock from price action perspective, but it has had a pretty good recovery because they are implementing things. They are trying to do cost reduction. They have gone through, probably might still be going through a whole cycle of restructuring their management from top to bottom. So yeah, maybe that's paying some dividends at least for now. But we can see that, look at these candles, fair amount of fight going on between the bulls and the bears. So we'll see eventually who will win, but it's right at the technical levels there we can see pullback happen here. Then if we take a look at Morgan Stanley, here we go. So this is the daily chart of Morgan Stanley. It went right into this gap which we had identified, completed this black ABCD around here. Now it's pulling back. Now we have to wait and see whether there's enough strength in this stock that's actually able to break above these new highs to go towards 120, because there's a possibility that it's a fairly range bound stock, although pretty big range, about 30 bucks, 40 bucks. It might actually find resistance and start to rotate lower and come back into the middle of the range. So that's possibility is still there. And then finally, last but not least, we'll take a look at the Wells Fargo Bank. And here we go. It's one of the banks in which Warren Buffett has pretty big positions. Probably still has. I don't know. I don't follow his portfolio, but he used to talk a lot about this before the scandals broke out a few years ago. So what we have seen now, this is a really interesting part of it. During this cycle around here back in 2022 especially, we had a bearish symmetry in this. So whenever the the market was rallying about a certain amount, sellers would come in, and then we saw that finally symmetry break. And then if it is able to actually get above this zone around here, we do have a ABCD completing around 75, which means that it could make a new all-time highs. But if it breaks below 55.40, then I think it means that we might have seen a topping formation, more like a double top around here, right into this gap, and the stock could pull back much further. So this is what we are watching in the US banking stocks and ETFs, what the financial systems look like, and we can see that especially the smaller banks, they seem to be performing pretty well, and in percentage terms, in fact, they're outmaneuvering the bigger banks, from a percentage perspective in regards to the price of those stocks moving higher. So with that, I'll take a leave. So thank you very much for watching the video. If you like our technical analysis and the video you found it of educational value, then please do subscribe to the channel and also like the video. And if you do subscribe, then also hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So good luck, good trading, and speak to you guys soon.